Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only. It doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I have got the S&P 500 up on the screen, and this really has been a fascinating week. So we've got some people talking about recession indicators, others are saying stocks are climbing a wall of worry, but that hasn't been the most interesting development. For me, the most interesting development has been the sell-off in the market. Now, you might look at this chart and ask yourself, what sell-off is he talking about? And it's really just been a general pullback towards the 50-day moving average. So I've got the 50 and the 100-day moving averages, and hasn't even got back to the 50-day. So on the surface, it appears, look, nothing to see here. But it's when you shift your focus to the market internals and even some of the other indices that you get to see a different picture. So I'll show you what I mean. Let's jump over to the Dow Jones. So we've got the Dow Jones Industrial Average on this chart. Now, this is an entirely different picture. The Dow is down over 5% in the last week and a bit. And so a very different picture to what we're seeing in the S&P 500. And last week, you might remember we were talking about a key reversal day. It's here on the Dow, but it's more prominent in the S&P 500. It's also on the NASDAQ as well. So just quickly going back to this key reversal day, and that's where the market opened above the previous day's closed, made a new high, then closed below the previous day low. So that's a key reversal day, often a sign there's some sort of downward shift in the price action coming. That's been playing out over the last week. So let's come back to the Dow. And while the S&P has been holding up relatively well since giving that key reversal signal, there's been more pronounced weakness across stocks generally. We're seeing this happen in the Dow. Another way we can see this is by having a look at an equal weight ETF. So this is the S&P 500 equal weight ETF. You can see the selling has been more pronounced than in the S&P 500 capitalization index. In this situation, the ETF is below the 50-day moving average. The S&P 500, of course, is still above the 50-day moving average. And so why is the S&P 500 holding up better than the broader market? And what does this mean for the weeks to come? Well, firstly, let's have a look at what's causing the S&P 500 to hold up as well as it is. So let's just jump over to a different chart. I'm going to call up a chart of NVIDIA, and this really answers that question. So have a look at this. Now, NVIDIA makes up around 6% of the S&P 500, and in just the last week or so, it's up about 20%. So that's a large move in such a heavily weighted S&P 500 stock. And so what it's doing, it's essentially almost single-handedly, you could say, it's propping up the S&P 500. So we're seeing the S&P 500 look relatively stable, whereas jump over to the Dow and it's a different story. And we're seeing this across, when you look at the equal weight and so on. And you go, well, look, why is the Dow not holding up better? And a big reason for that is that NVIDIA is not part of the Dow. It's not in the Dow, and it's not doing much for the S&P equal weight because the equal weight, it only makes up 1/500th of that index. So it's an interesting situation when we look at it from that perspective. I think, so what does all this mean? What I think this means is, I think the price action in the Dow, which we're looking at now, and in the equal weight, suggests that we're in a broader period of consolidation. So if we look at this price action on the Dow, From October, we've got a 5-month period of strong rising prices. And now we're in a period of consolidation, which is standard, typical price action after a lengthy period of strong gains. Now, consolidations, they're often difficult to navigate. They're choppier, they're less consistent than a rising trend. But I think what we could see over the next several months, we could see back and forth price action where the market just chops, maybe within a range. So one scenario would be that I don't have a crystal ball for like how this will play out, of course, but maybe we see the Dow move within this blue rectangle for several months and consolidate those previous gains that we saw from the October low. I think when we step back and we look at this overall trend, I think the overall upward trend remains in place. There's nothing here at the moment which would suggest otherwise, but it does seem like the market needs more time to consolidate those gains that we've had since the lows. And I think that NVIDIA's extraordinary strength is masking what's going on behind the scenes, and that we can see in the Dow, that we can see in the equal weight. I think the play here is one of cautious optimism. I think it's about holding profitable positions and using wide trailing stops to try and see off this consolidation, if that in fact is what is going on. And it's also about cutting losses and not letting those losses get away from you. And it's also about being patient with buying. I think this is really important. It's not just about buying any dip. Be patient with the buying. Wait for the right setups to appear. They're the ones that we want to act on, but you've got to wait for them to be in place. So be patient. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just tells YouTube you're watching. YouTube then goes and shows other people, and that helps me heaps. So please do that. And also click that subscribe button if you haven't already done so. Now, just to wrap up, let's have a quick look at the small caps. And I think this is one of the reasons for cautious optimism. Now, considering what we've seen in the Dow, when you see we've had that 5% plus fall over the last week or so, come over and look at the out of favor small caps, and they've been remarkably resilient over the last week or so. It wasn't that long ago when a down day in the big caps was magnified in the small caps, and we saw a whole lot more volatility. But so far, the small caps are holding in well with the recent volatility in the Dow and with stocks generally. Now, of course, the small caps are a lot further below their all-time high, so that's one reason why they could be holding in better. There's already been significant selling, but I think that the relative stability adds to the scenario that we're in a large basing structure. So I think this price action we saw through 22, 23 is really part of a large base. So just looking at this from stepping back and looking in more detail, the big rally during 2021, 22 peaked out, came back, base, and now potentially starting to lift off that base again, but with some more consolidation possibly to play out. I think there's a lot of upside potential here, but for now it's a case of just being patient, waiting for a breakout. This is one of those situations where I'd prefer to buy a breakout to new highs rather than preempt a breakout, because, like, who knows, we could see this travel sideways for several weeks, several months. We could see it pull back further. Of course, a breakout may never happen. So waiting for the breakout seems to be the play rather than preempting something. Wait for the signal to actually occur. So, look, I think we will leave that there for this week. Thank you for joining me. Hopefully that's been interesting, gives you a few ideas, and I look forward to coming back and talking to you next week. Till then, bye for now.